What's up, guys? Today I'm going to be sharing with you everything you need to know to create a winning investment plan. This video is for anyone looking for actionable steps to create that investment plan, as well as my top 4 rules that will protect your hard-earned money and will help you to take home solid profits. As a new investor starting out on my own 3 years ago, I had no trading plan and I lost a lot. And I kept losing until I started setting goals, analyzing my psychology regarding money, and making strict rules. What I'm sharing with you today is going to set a solid foundation for you as soon-to-be successful investors. Now, before we get started, I want you to grab a pen and a piece of paper and prepare to write down your answers to the prompts I'll be giving you. At the end of this video, you'll not only get to know yourself a little better, but most importantly, you'll come out with a plan that you can follow when investing in the stock market. Also, don't forget to hit that like button and subscribe to the channel if you haven't already. So without further ado, let's get started with your investment plan. So before we get started, I want to make it clear that today we're covering how to make your investment plan and not your trading plan. In a future video, I'll be covering how to make a trading plan. But pretty much how they differ is that investors typically hold shares of stock for longer periods of time while capitalizing on higher growth, while trading typically includes entering and exiting positions from anywhere between a few seconds to several days. Overall, trading is riskier and requires a lot of discipline with extremely strict adherence to your predefined rules. I'm assuming that most of you here are newer in the markets, and while trading to make daily and weekly money can absolutely be a goal in the future, I highly recommend learning to start to invest and buy and hold shares of stock for the long term. On this channel, we're going to learn and we're going to study ourselves up, but we're also going to keep it simple and start with the basics. So we're going to get started with a self-evaluation where you'll determine how much money you'll be comfortable putting into the markets, and you'll get to know a bit about your psychology when it comes to money. First is, how much money do you make? Are you in a career position where you bring home a certain amount every year? Are you a student who has work study? Could you potentially be an inheritor of a trust fund? If you are, I'm insanely jealous of you, but that's neither here nor there. Next, I want you to consider what percentage of that amount would you be comfortable to deposit into a brokerage account. Now, I used to contribute 10% of my paycheck to my 401k. However, once I started realizing that I could double my contribution in my own brokerage account instead of relying on the typical 8 to 12% returns that you typically see with a 401k, I decided to put that same amount into my brokerage account every paycheck. Now, you don't need to contribute a certain amount every paycheck, and you may just want to start with a lump sum. Totally okay, just start thinking about an amount that is comfortable for you in your current financial situation. Lastly, I want you to start thinking about your psychology when it comes to investing. Some questions I want you to ask yourself is, do I need to see profit right away? Or am I comfortable holding shares from anywhere between months and years for anticipated increase in price? Also, start thinking about your risk to reward tolerance. This refers to the amount of money you're willing to risk losing for an anticipated move. This becomes even more important once you start learning chart patterns and indicators such as support and resistance. For example, if you watched my previous video on my top 5 stock picks for the month of August, I talked about the price of a certain stock being at a significant level that has potential to increase by over 60% in the next year to year and a half. However, if the stock continues to fall from its current level of support, it could fall to its next level, which is just about $30 below its current price. So in this example, you'd be risking $30 per share for a potential increase of at least $100 per share. I not only want you to start thinking about how much you're willing to lose on an investment, but as you look to enter a position, I want you to see if the potential for gains outweighs the risk of losing. In my case, regardless of whether I'm day trading or looking to enter a position in a long-term investment, I won't consider it unless my risk to reward ratio is at least 1 to 3, or I'm willing to lose $1 if there's potential to make at least $3 off of this position. Now, based on either the lump sum you want to place in a brokerage account or a certain percentage of your paycheck, I want you to consider how much of your account size you'd be willing to lose and still be able to sleep at night. That way, regardless of how much potential you think a company might have, you'll exit your position if you see a loss of whatever amount you've predetermined. So now that we've done a brief self-evaluation, let's get started with setting goals. I want you to first think of where you want to see yourself in 5 years, 10 years, and even retirement. Is your plan to retire off of a 401k? Do you see yourself investing in real estate and gaining equity so that by the time you retire, you're able to live off the rental income generated by those properties? Do you want to quit your 9-to-5 job and use the stock market as your primary source of income and maybe pack your bags, travel for half the year, and potentially be making a few $1,000s with an internet connection in the Maldives by the time you're 30? All right, I'm getting a little ahead of myself, but go ahead and write down a few things that come to mind immediately. Now, if you don't know what your goals are just yet, don't worry, but start to think about it. Next is to consider what your goals are in the market. Are you more of a low risk, set and forget kind of person, or are you thrilled with the idea of making money every day with just a few taps on your phone? Now, I know that these represent two polar opposites, and your goals may include a combination of both or anywhere in between. Now, if you're just getting your feet wet in the markets, I'd start off with a goal of setting and forgetting, buying long term, and letting those shares make you money passively while you study up. Now, setting goals for yourself not only when it comes to investing, but also your personal lives is so important. Make sure to break down your bigger goals with smaller, more achievable ones. Whether that's setting aside a certain amount of time every day to learn how the market works, or having a goal as simple as making 10% on your account size every month, I want you to start thinking of ways you can achieve your financial goals. Lastly, I want to share with you my 4 rules for investing in the stock market. Now get ready to write these down, as you'll want to have them committed to your memory every time you look to invest. The first rule is to never enter a position all at once. I highly recommend using what I call a rule of thirds. So let's say you have $90 to enter stock XYZ. Now you expect to hold this for at least a year for tax purposes, and also because you see that there's potential for massive growth. Now let's say that you hear about the stock on Instagram. What you'll do is put in a third of your $90 into shares of that company. Now if the price of the stock drops, you can average down with another third of your money. And if it drops some more, you can average down with the remainder of your money or your last $30 that you've allocated to stock XYZ. This is advantageous because it allows you to average down the price of your stock and increases your margin for profit. Now, my second rule is that unless you are planning to hold a stock for more than 5 years, you need to look to take profits off the table at a predetermined percentage. I highly recommend taking profits between 20 and 30%, even if the experts are predicting it to go up another 30%. Now, you have heard of Cathie Woods, a very popular figure on Wall Street, give price predictions for certain companies in her portfolio. However, a lot of people don't realize that she has a long-term trajectory of at least 5 years for these companies. Now, there's a common saying on Wall Street that hogs get slaughtered. So take my advice, don't get slaughtered, and if you plan on holding your position for less than 5 years, look to take profits at 20 to 30%. There will always be opportunities to enter into other promising positions in the market. My third rule is taken from none other than the Oracle of Omaha, or Warren Buffett himself. He said rule number 1 is never lose money. Rule number 2 is never forget rule number 1. His advice stresses the importance of avoiding loss in your portfolio. Of course, anyone could tell you not to lose money, but what he is saying here is that you shouldn't just be focused on the potential for gains in your investment, but you should also look for signs of it going to the downside. My last rule is to diversify what you invest in. Don't just invest exclusively in EVs, for example. Yes, your portfolio will skyrocket if everyone in the markets decides to funnel their money into that sector. However, this is extremely improbable and risky, and the best way to hedge against losses is to diversify. Consider what sector that the companies you are looking at are in, and try your best to have at least 3 different sectors in your portfolio. For example, these can include pharmaceuticals such as Moderna, technology such as Zoom, and transportation such as Boeing. So anyways, guys, those are the ways to create a winning investment plan while protecting your hard-earned money and maximizing your profits. I hope you got a lot out of this video, and I'd like to hear what some of your financial goals are down in the comments below. Also, don't forget to like and subscribe and hit that bell so you get notified every time I post a new video. Creating financial success is my passion, and I'm so excited to be building an awesome community of like-minded, driven individuals. I make weekly, sometimes bi-weekly content on all things stocks, so if you think your friends or family members might benefit from what I'm sharing here on this channel, please don't hesitate to send them over here. Anyways, that brings us to the end of this video, and I'm so excited to see you all in the next one. Peace!